Shane, I have to say I felt a lot calmer reading your recent note saying that there is cause to err on the side of optimism, or at least if you're going to be pessimistic, you're probably going to get it wrong when it comes to timing low points in the market, right? So tell us about your strategy as we kind of enter this weird end cycle phase.
Well, I guess, what I'm talking about there in terms of optimism, the history for share markets, literally, in fact, I've got a book over there to the left somewhere in my bookshelf here called The Triumph of the Optimists. The history of share markets is literally the triumph of the optimists. The share markets trend up over time. Trying to get the timing right is often very difficult. Just in terms of that timing, bringing it back to the very short term, we are going through the August, September, October period. We've got August out of the way. It was a slight negative, not as bad as might have been at the middle of the month. But that seasonal weakness is still with us, and there's still a whole bunch of factors out there which could cause volatility in markets after the strong gains we particularly saw in the US and elsewhere going into July. So right now, I'm still feeling a little bit cautious about things. As we know, those inflation risks are still there. Central banks have eased their tightening bias, but they still have a tightening bias. That said, I don't think they're going to raise rates in September, whether it's the Reserve Bank or Europe or the US, but they still have a tightening bias. The recession risks are still there. And, of course, we've got government shutdown risks for the US later this month, or particularly going into October. So I suspect the volatility will remain high at the very least. But if we do get a pullback, I would see that as a buying opportunity because the inflationary pressures globally are easing, and that ultimately will take pressure off central banks.
Yeah, Shane, I'm just looking at that book, 101 Years of Global Investment Returns, the Triumph of the Optimists right now. If inflation does, well, it has returned past tense. If it remains elevated, what does that mean for returns these next 12, 24 months in the equity market? What's your view there?
Well, if it remains elevated around these sorts of levels, or at least well above target, then obviously that's a constraint for equity market returns, because you've got to face the fact here. We've gone through many decades up until the pandemic and into the pandemic where inflation and bond yields trended down, and that supported equity markets, high price to earnings multiples. And if inflation doesn't come back down again as markets are sort of pricing in, then obviously that would be a negative surprise for investment markets. So that's certainly a risk, although it's not my base case, but that's certainly a risk.